to The Risk Factor, a podcast by the Singapore College of Insurance where we explore trends, transformations, and trailblazers shaping the future of insurance in Asia. Now, in today's episode, demystifying investment-linked plans in Singapore, turning confusion into clarity, we're unpacking a product that's been in Singapore for more than 20 or 30 years, but still triggers strong reactions whenever it is mentioned. Now, some people see investment-linked plans as a smart way to combine long-term investing and insurance protections. Others think of them as complex, full of charges and something to avoid with a 10-foot pole. Now, our goal in this episode is simple. Now, it is really to get to the facts or to the crux of the matter, to explain what ILP is in plain language, why are they designed the way they are, to discuss when they make sense, whether it's for medium or long-term goals, and to tackle the myths and misconceptions that we hear in Singapore. Now, to help us do that, we're joined by two leaders who sit at the very center of this, or the heart of the conversation. I have Mr. Chan Wai Kit, Executive Director of the Life Insurance Association of Singapore, who brings that industry perspective as well as a little bit of the regulatory perspective as well. And he's joined by Mr. Eng Beow, President of IFPAS, or the Insurance and Financial Practitioners Association of Singapore, who brings the practitioners and the client-facing perspective. Wai Kit, Eng Beow, thank you for joining us today. Let's kick it off very quickly. Wai Kit, to you. What exactly is an investment-linked plan, or ILP as it's commonly known? Your words. What do you think it is?
Sure, thanks, Shalini. I think ILP at its really basic way of looking at that, it's a building block of an entire financial plan that one gets into. Under the plan in itself, it is a life insurance policy which actually combines two key elements. One, protection for the individual, at the same time, investment. Right? How the person gets access to the investment is really through allocating their premiums to reference into the investment-linked sub-funds performances. So at the very crux of it, therefore, it's just a bit of a hybrid plan that balances between protection and investment. On the protection element, that is where, just like any life insurance policy, right, the most fundamental protection is upon death, right, whereby if a person unfortunately passes on, right, there is a minimum death benefit that is payable. And this, one important part is that this is regardless of how the investment performance may have been.
Okay.
So that gives a bit of a safety net and a bit of a base level of protection that is to the customers. Right. At the same time, I think that a customer may also leverage it to actually get into allocation into professionally managed fund. So when the plan is actually set up and before it is available for people to buy and to take on, what happens is that at the back end, the company has actually done a first curation of the funds.
Okay.
Right. So at the first step, the company will have curated a set of funds, whether it be 10, 50, 100 funds that they felt are generally the better performing funds to be on the platform. Then as a customer, you get to, depending on your risk profile, your risk tolerance, etc., which a financial advisor will assist to go through to then allocate into the respective funds to get their performances.
Okay.
Right? So one of the things that sometimes overlooked also about ILPs is actually their flexibilities, right? So beyond providing protection as well as investment returns or reference to the investment returns, it also offers different kind of flexibilities depending on the plan design. So for example, right, I think that some people may say that, well, death protection, that's very basic. I may want more types of death protection, right? That is possible via riders. Right?
Okay.
For example, to get a critical illness rider to actually top up the protection level. So that's a flexibility that's there, right? There will also be some other flexibilities like change of life assured, right? So where at different stages, you might choose to change a life assured to protect someone of your family members, to help with a legacy planning, etc.
It's a complete change? I can do a complete change?
You could actually change, yes, you could just change who to be protected.
I see.
Right.
I
So
could add,
that's
remove.
Yeah.
Okay,
Yeah.
wow.
Now, of course, again, all this depends on the product design.
Okay.
Not all products are designed with all the flexibilities, all the bells and whistles in place.
Correct.
But these are the different general variations that can happen in the ILP plan.
Okay, very good. Thank you, Wai Kit, for breaking it down for us to provide that how the product is constructed. Now, Eng Beow, if you can explain, for in terms of investment linked plans for clients in Singapore, how do you break it down for them so that they see how the product works?
Okay, so thank you for the question. I thought Wai Kit has given a very detailed explanation of what ILP is. I would just want to share a little bit more about the history of how products probably came about.
Okay.
When I just joined the industry, I thought there was a beautiful story taught by the trainer. He said, do you know how insurance even get designed in the first day?
Okay.
I said, wow. I tried to Google, I couldn't get the answer.
Okay.
So the answer was that, long ago, there was this very, very poor village.
Okay.
So what happens is when people died, they can only bury them in the backyard. So as time passed, right, one day the villager here was walking past and he's seeing the living condition was really bad. Can you imagine, the corpse may be rotting, quite bad. So he called for a village meeting. At this rate, that things are going, I think we are all going to fall sick. And second,
that's true.
we are not respecting the dead. Shall we do something? Okay, shall we pool funds together? So if every month someone dies, you use the fund to give a proper burial, and the health condition can be better. That gives rise to the first insurance policy.
Like a mutual.
Yes.
Okay.
We pool funds together and solve the problem of individual. When everything is a probability game. Okay, so when someone needs help, we go and help. Okay, so then as time goes on, the village got better. Living standard got better, and some villagers start to ask, villager head, I don't mind to pool the money, but if nothing happens to my family, can I get something back?
Oh, yes, that's true.
Sounds true, right?
That's true.
Some value back. So that's why whole life policy get in place. Yeah, you put in a bit more, okay, with more consolidation, with more funds, we can do more things, okay, then we give you some returns if nothing happens to you. However, we know now with all the inflation rates going higher and higher, probably some of the traditional policies can no longer, they can only be on par with inflation but cannot beat inflation. That gave rise to investment-linked plans. It's an option for clients because I always love this analogy that I gave. Number one thing is, how far is your destination?
That's true.
If your goal is to go JB, we can walk. Technically, we can cycle. Technically, we can drive over there.
Okay, or die trying. I don't know whether I got stamina to cycle to JB. Maybe Eng Beow does. Okay.
Because for my parents, maybe my grandparents, going to Malaysia, they are very happy already.
That's true.
You know what I mean?
Yes.
But now, if you are going to USA, you
or
want
Poland,
to go to Europe,
like Wai Kit is heading to Poland for holiday. Yes.
Yeah,
Okay.
You can't walk. You can't drive. You need a faster vehicle.
Okay.
You definitely need a faster vehicle. That's how the ILP will fall in place. However, we know that a faster vehicle like an aeroplane, will there be risk? There will be risk. There will be turbulence. I just came back from a trip from Guangzhou. It's only a 4-hour flight, but we had turbulence also.
It's more frequent now than ever. Yes.
A faster vehicle, there will be risk. However, when the risk comes, when the turbulence comes, the pilot will not say, we are entering a turbulence. Everyone, get your life jackets.
Yeah, exactly.
No, they
That's
don't do
true.
that. They don't do that. They'll just
they
say
don't
buckle
scare you
up.
that, right?
They'll just
Yes.
buckle up, brace yourself.
Yes.
And the best part is, you see some people will be fearful, but some people who sleep through the whole journey, they don't even feel anything.
True.
Okay, I'm not saying that.
Those are people with different risk profiles, right?
Yes,
Yeah.
yes. At the end of the day, it's really all advisors, if we were to give an investment link plan, we are the co-pilot. Okay, because whenever there's a turbulence, the first thing I look out for, who do you look out for when the pilot says the turbulence or when the flight enters a turbulence?
The stewardess?
Yeah, I will take a look at the stewardess.
Like, how do they look calm or not? Yes.
No, one thing, pretty people makes me calm. No, joking. You're right, totally right. If they are running.
Because if they are nervous, I'm going to start sweating.
Totally.
Right?
Yeah. But if they are still calm,
Yes.
they're still going around gently, I think it's good. So that's the important thing over here. When we do investment link, the key thing is never overreact. Yeah, because one key thing that when we do investment for our clients is always this thing. How do we gain from investment is when we buy low, sell high. When we buy high, sell low, we will never gain from it.
That's true.
And we know that when market crashes, it's a high or low, it's a low. So it's never good to overreact. But we can. We always say that the best gardener will not tell you to uproot all your plants from one place to another when there's a storm. But they will help to build the garden that can withstand the storm. Because if the fundamentals are good, that's the difference between funds and the independent stock. okay, of a well diversified portfolio fund, okay, can withstand a good storm. It's just that don't panic. Okay, can we ride through this? Then we can your garden will still look good after the storm. Okay, so with that, so that's the history, and that's why investment linked plans are here mainly to beat inflation and to offer flexibility. So with progression again, okay, in the past there was only protection ILPs. So protection ILPs is like what Michael mentioned, is a balance beam. So your premiums coming will be balanced between cost of insurance and your investment returns. Okay, so when the cost insurance goes higher, that means if my liabilities are high, my children are low, I want higher coverage, the cost of insurance will be higher, then the investment component will be lower. But as my children grow up, okay, now my liabilities are lesser. The flexibility is there for me to reduce my cost of insurance. So more goes into investment to help me for my retirement plan. Okay, so that's the thing about protection ILP. And a lot of features that comes in additional example is a waiver rider. This is what I feel is one of the most important riders we should put in for any plans we have, because this safeguards our dream. For sure is that the 1 in 3 will fall sick. So 3 of us.
Oh dear.
Okay.
One is currently sick. Okay, Wai Kit is weathering through.
Our weather through that. Balance that for all.
But the next stats is that 7 in 10 will recover.
Oh, okay.
Yeah,
That's
but
good.
also with medical advancements, it's really good. So that's the beauty of the rider. Okay, if you are sick, I could not work anymore. I want to really focus on recovery full time, but your policies will be self-funded. And when I recover, okay, there's still a fund for you for retirement. And if it's a plan for your children, the education wish is still there. Okay, so that's for the protection ILP. And of course, some of the clients, because of health reasons, because they want a stronger wealth accumulation, that's the 101 ILP came about. Okay, so 101 ILP, key thing is that I want a better growth in terms of my returns, investments. Okay, at the same time, I want some coverage, not a lot. So generally, this kind of plans comes with a waiver premium to ensure that even if things go through, the premium can continue to be serviced. And one key factor is that it pays out either 101% of your premiums paid or the account value. Okay, so whichever higher. So some of the older clients who bought this kind of plan generally is that even if market were to tank at the wrong time, there's a legacy that they can pass on to the next generation. That's based on 101% of the premium.
Okay.
Yeah. So, but we must understand all policies, not only ILP policies, even of traditional policies, our whole life policies, term policies, every policies comes with charges. Okay, it's important for us to understand how these charges work, how these charges can work for me or work against me. Yeah, then we can have a better understanding of whether or not this is a suitable solution for me.
Okay.
Yeah.
Okay. Very good. Very detailed explanation, Eng Beow. Thank you very much. We've covered the what. We've covered the how it was designed. Let's talk about the why. Why behind the investment linked plans, right? So this product has been in Singapore for a few decades. They blend, as you mentioned, protection and investment. They were not designed by accident, right? There was a lot of thought put into creating this product, answering probably a need in the market, need of consumers out there. From LIA's perspective, right? When ILP was the investment linked plans were first developed or introduced into the Singapore market, what was that design purpose and how has that evolved in the last 20 to 30 years?
I think that when ILP really first came about, right, I think that it was also very traditionally, I think that the life insurance market in itself started off with products like whole life plan, right? Whereby it's just really about pure protection, there's some returns, but the returns are managed by the company and then delivered to the customer. So one of the key elements, therefore, of ILP is giving that additional choice, empowering the customer to make a choice.
Okay.
That they get to essentially participate in how the returns are being obtained. Right? Because there will be a group of customers who are, yes, I'm happy, I trust you as the company to do the right thing, to allocate the returns to me. There's another group of customers who may say that I would love to participate in that. I would love to have a say in how my returns are being derived, or how my returns of the policy are being obtained.
Okay.
So therefore, there's that one and that desire to have control of the investment returns and obviously ultimately their own financial future. So that was where it is probably the only product that is out there in the life insurance space that gives that control, that empowers the customer to make their choices based on their risk tolerance. So that's a key thing that led to the development of the product in itself.
see.
I think over the past, probably 20, 30 years or so, I think while the chassis is largely still there, but there has been a lot of also continual improvements from either feedback from customers, regulators, our own observations from the industry, where there's additional standardization of disclosure. All right, there is things like charges. What are the charges should be? How should they be mentioned? What you can say, what you should not say, not to mislead people. So there has been a fair bit of improvements over the years in that regard in terms of disclosure.
Okay.
Obviously, I think as customers' literacy, I think that we are grateful for that as customers' financial literacy has increased, right? I think that there is also a pull factor, or there's also a factor there that causes, I think, that insurer to also be on their toes in terms of the funds that they curate, what's the range, the diversified range to cater to different needs. So that part has also evolved, I think, along the way.
Okay.
Right. So I think all this has, while the fundamental chassis is still the same, right, in terms of flexibility, in terms of disclosure, in terms of how it is being able to better meet the evolving needs, all this has improved from my perspective over the past 10, 20 years.
Okay, very good. I think there's still, while, it's evolved over time, but there's been a lot of, I would say, negative perception. People talk about hidden charges, or they say, I'd rather just invest directly. Why do I need to take up an investment plan? Just continuing on Wai Kit, and then I'll go to Eng Beow next, in terms of this, right? What do you think that perception still exists today?
I think it is fair to say that I think there are elements of such perception that lingers in people's mind, right? I think ultimately, ILP is really for medium to long term, right? So there might be some people who might have bought perhaps 20, 30 years ago, have a little bit of the less pleasant experience that might carry forward, right, into today's time, thinking that there's hidden charges, there's a lot of unknown into it, right? But having said that, I think it's also important to recognize that things have moved quite a bit, right? Charges are being a lot more in terms of disclosure, are being clearly disclosed, I think, since quite a while back, right? So there has been a lot of initiative, whether led by the association, led by regulators, in terms of what's the best way to disclose such that it enhances customers' understanding.
Okay.
So times have moved in that sense quite significantly. So that is one element of it, right? At the same time, I think it is also key that from a association perspective, we actually have work groups that regularly review the illustration rates to make sure that we are not setting unrealistic expectations for consumers. Because as everyone would know, you will get actually a product illustration that illustrates at X and Y rate. This X and Y rate therefore needs to be regularly reviewed so that to make sure that expectations are not wrongly conveyed, and nonetheless they are only illustrative returns. Right? So there are a number of steps and processes in place to make sure that we essentially empower the customers as well as the FA reps to have a better conversation from that sense on how this product can meet the needs of the individuals.
Very good. Eng Beow, your thoughts?
Key thing is, if a product is doing well, if your product is doing well, you won't complain. So generally, I must say that for ILP, personally as a practitioner, I thought ILP is one of the most transparent policies because it's one plan that you can generate on your own Excel. You put your premiums in, you put the rate of returns in, you put the cost of insurance in. The rate of return is what the illustration can be shown. Whereas for a whole life plan, I can't do that because in terms of the calculation, in terms of bonus payout, there are just not enough information for me to generate my own Excel to see how it can be done. So because for myself, I like numbers, so I like to see how it works. In fact, ILP is very transparent. There are charges, I must repeat. All policies, there are charges. Okay, they are not hidden. They are written very clearly in the product summary. Okay, and
Do people usually read product summaries?
I must say they must.
They must.
Okay, I mean it's one of the
Okay.
practitioner code of conduct we need to go through with our customer.
I see.
We
Okay.
have to go through this with our customer.
Okay.
And I must say this. Okay, there are a lot of good advisors out there. Okay, there were also some black sheeps. Okay, probably some. I'm saying this. Okay, saying that because in IFPAS, what we do is really to up the standing and the training of all practitioners to make sure that we are giving the right information. Even if you go to a doctor right now, they will tell you for this treatment, this is the side effect. This is the benefits. Okay. So same thing. We need to let our clients know, okay, what are the limitations of an investment linked plan? What are the causes and charges that will affect your real return? ILPs, we must understand, is never guaranteed. Only what is guaranteed? Do you know? Only your sum insured is guaranteed.
Oh, okay.
Okay, until you change them. Okay, the units probably you earn, they are there. Okay, but in terms of returns wise, they will always follow the market. It's never guaranteed. So that's why I must repeat that the charges are always there. It is not hidden. It is in fact one of if anyone wants to try, nothing to do at home, you want to generate Excel, you can take your ILP. All the numbers are all there. You can just run it in.
Okay.
However, like what Mr. Wai Kit mentioned, okay, it is a projection. Because it's 4% or 8%, they are assuming a linear straight line projection. However, the real market movement is a wave.
Correct.
Okay, so meaning what? When the market tanks, okay, and is below the projection line, technically there may be more units withdrawal for cost of insurance if your protection level is high. Okay, so these are some of the things you need to understand. So we always encourage, okay, that's why in terms of product classification, ILPs is under complex product.
Okay.
It is not a simple product like a term. Term is easy. How much premium? Okay. How much sum insured? How long I need to pay for? Okay, that's very straightforward. Okay, but ILP will really encourage, this is what we mention always, annual reviews. We, in fact, a lot of times is that we want to encourage clients, okay, please set up the annual reviews with your advisors. Because a lot of times the practitioners, we wanted to, we know that clients have their other priorities, year-end, travel. Oh, the department said, okay, I postpone.
And
okay.
life gets in the way, right?
Yeah,
Yes.
and the full consultant, we need to reschedule my whole schedule again. Okay, but this is something really distinct. Okay, when we decide to enter ILP relationship, is an ongoing process. So minimally one review a year to understand how your program works, how is it working for you, how it might be working against you. And because of flexibility, you can make changes along the way. There are charges and they are never hidden. Yeah, but the perception is that I must remind this thing because when clients buy a ILP, sometimes there's this perception, I'm buying an investment. They forgot that's the protection component.
Yes.
Yeah, so that's why I say, hey, why is the return so low? But there were the protection component. So, and one thing good about ILP is that if you really, in returns is something that you're more focused on right now, is important for you right now, you can always reduce your sum insured. Yeah, because if your children have grown up, I don't need so much, okay, and probably along the way I purchased some other protection, probably my company got some protection. We need to run through all the demographics, all the information given and explain, okay, probably your shortfall is this level now. You can adjust the protection ILP so that more goes into the investment component. Yeah, so this is something we want to share. There are charges and they're never hidden.
So when you mentioned that ILP is a complex product, does that mean it's only suitable for savvy customers? I'm just curious. I mean, what level of knowledge do I need to have? I mean, I'm curious.
Yes. So I want to go into the angle of solution giving.
Okay.
So key thing is, what is the problem our clients are trying to solve? Is it a protection problem? Is it a retirement problem?
Okay.
Is it an education problem? Is it a medical problem? Yeah, so I guess this will be an easier way to answer to our clients.
Okay.
Because generally ILP works is, if you're going for a protection ILP, is I have a protection problem and retirement problem,
Okay.
two at once. Okay, so probably I'll need a tool that can give me two-in-one solution, and this will come in. So because when we talk about retirement, okay, I can give you annuity plan, I can give you endowment plan, okay, I can give you ILP plan. The most important thing is how far are you away from your goal? How far are you away from your goal? So question, if the distance is very far, I can't use a slow vehicle.
Yeah, correct.
Yeah,
Yes.
so that's why we need to bring the ILP tool. However, you must understand. So that's why we have to do risk profiling every time for our clients right now, because risk profiling is important to understand the risk appetite of the client. Can they take it when the market fall? I must say this thing: investment market volatility is as common as rain. There's no investment that from day one to the last day 8% linear line throughout.
Very
It
true.
is
Very true.
never that.
Yeah.
So clients, this is a complex part. Clients need to understand. Okay. So it's not as easy as term. I pay this premium, I get this coverage. Okay. But if I don't pay, this thing is no longer there. Whole life plan, I would say that is also a bit simple. Okay. I pay this premium, I get this coverage. Okay, some plans with multiplier, you drop out at a certain age. The only thing probably it will be a variant is in the returns. Okay, because due to market results, okay, the insurer may decide to increase bonus, reduce bonus. That's the something that's not determined. So the last one is the ILP. You must understand everything is a projection. So and when we have this 4 and 8 projection, okay, I like to ask, okay, what's the reason why 4 and 8?
Oh my God, we're getting quizzed like
Your-
nobody's
No
business
problem.
by Eng Beow.
Your-
I'm failing this quiz like nobody's business. Okay, Joaquin, over to you.
Sure.
4 and 8. What is this 4
How
and
did this
8?
4 and 8 come about?
What is this 4
Sure.
and 8?
I think when we really look at that, so obviously 4 being the lower bound,
Okay.
or 4 being the lower rate, not lower bound, the lower rate, and 8 being the upper illustration rate. So what happens in every review is that we actually conduct studies across the entire Singapore landscape.
Okay.
All right, to actually look at what are the returns that has been actually generated.
So the 4 and 8 is 4 years and 8 years. Is it?
No, it's not.
No, what is
so,
it?
So it's 4% and 8%,
Oh,
and
I
illustrator rate of
see.
4%
Okay.
and 8%.
Okay.
Right. So we actually look across that in general, regard of the different asset classes, whether it's in bonds, it's in equities, it's in other type of funds. Generally, I think what are the rate of returns? Right. So then I think that's aggregated across industry.
I see.
From there, then I think with the actual insights and knowledge, we look at what is essentially likely to be more on a sustainable rate on an ongoing basis from a projection standpoint.
I see.
Right. So that's how 4 and 8 was determined, or previously I think 5 and 9 at one point in time,
Oh,
etc.
I see.
Right. So it basically looks at the landscape and then look at what are reasonable rates over a long period of time to be expecting from potentially to be illustrated. Right? But like I think what Eng Beow has rightly pointed out, right, it's never a linear path.
Correct.
Right? There might be a year whereby you get a 6% because of, and it depends on what funds you choose as
That's
well.
true. Yeah.
Right? If you choose more conservative funds, I mean, by logic of the fact that they are conservative,
Low
low risk, low return.
returns. Yeah.
Right? So it also, that becomes the element, which is why we say that when 4 and 8, they're literally just projection. If on average it is at 4, if on average it's at 8, this will be what you get. But the basis of it ultimately is your own risk profile, your tolerance, the choices of funds, and how they perform over time.
Over time. Yeah.
Right? And that's also why we always say that the plan is really for medium to long term. Because short term, you will get the cyclical effect.
Yeah.
And you will not
You
have
wouldn't
the
have
time
to recover, right?
Right? I mean, it just so happens that that day is a rainy day, right? To the point. Then, unfortunate things do happen, right? So that's why it is always a medium to long term vehicle in general.
Eng Beow, you wanted to add anything?
Yeah, definitely. So this is especially important. So our understanding is also this. So 4% is because long-term bond returns, okay, is at 4%, equity probably to 9%. And in some investment platforms, you will tell them, they will mention that if you are looking at long-term equity, it's 12%. So in fact, in our policies, 8% is I would say that is a very reasonable amount. And I really want to say one more thing, okay, which is in fact, when we go into an ILP, don't be afraid about a market cycle.
Okay.
When market drop, question is that, okay, let's say now all of us like this brand of clothes. Okay, let's maybe call it ABC brand. Now there's a discount.
Okay.
50% off.
Okay.
We know we need to wear it. I need to wear my shirt. Okay. So I need to buy it. Do I buy it?
Buy every color.
Buy. Yeah. So when there's a discount, we buy.
Yeah.
So same thing for investment link. Our clients need to understand that when market crash, okay, it's actually a good time to invest. The same thing for the example of when you know that after the storm, in fact the soil is best for cultivation.
That's true.
Okay, so so that's the beauty of a investment link plan. When there's dollar cost averaging, you will keep purchasing units when the price is low, because at the end of the day, like Mr. Joaquin mentioned, is for long term. Market always recover. Market most of the time they recover if you are in a good diversified portfolio. Okay, and the fund is well taken care of, because for all insurance companies, the suite of product, they need to go through due diligence. If any time the funds are not doing well, they have the due diligence to work on them. Yeah, because that's what I see in a lot of companies. They will change the fund managers and to ensure that the long-term sustainability or the growth of the funds are there. Okay, so it's just that when the market drop, okay, don't panic.
Yeah.
You need to speak with advisor to know what's the next course of action. Okay, there are always three things you can do. You can sell, you can hold, you can buy more. Don't only sell.
Yep.
Yeah.
Yep. Very
So that's why this is one part we must replete. And 80% of fund performance is based on asset allocation. This is something we must know. So that's why we mentioned that it's important to go for a yearly review is really important. Like example, if we are just into the period of subprime example, now we're back to 2008. So when people are all very worried, okay, they may want to start a conservative portfolio. But 5 years on after subprime, they are still a conservative portfolio.
Oh, okay.
You know what I mean? So that's why when the clients go back to them and say, hey, how come is my portfolio not growing? It's because your asset allocation is not there. You probably forgot to redirect your funds into the assets that's growing. But back here, now we are looking at, is it very scary to go into investment? Okay. So one thing I really want to share with all of us is that all companies exist to make money. Okay.
Yep.
And marketing and research and development will help the company to make even more. There was one example that was given to one of the trainers that I thought I really liked. Do you like this fast food restaurant chain? Like this alphabet that comes before N, huh? Okay. So wow, it's a very family lifestyle. I would say food chain restaurant. So once you go there, you're eating, you're generating income. So question is that why don't you want to hold the share? Because once you hold the share, you also may hold part of the profit. Yeah. So investing is something that I must say that is a tool to beat inflation. You just need to know which one or which is the angle or which fund manager, whether the strategies align with yours. Then go for long term, and we need the long term investment rate of return to beat inflation.
So we covered the what, we covered the why, we covered the design, the purpose. We had some analogies as well. So let's move a little bit into product design, into real needs. Wai Kit, for you, right? So in terms of the overall life insurance landscape, where would the investment link plan products sit today? Where would that sit?
Well, I think like I mentioned a little bit earlier, I think that it is really a hybrid product, right? That really balances, like I said, between the protection and the investment element of it. And importantly, the right for the customer, based on their risk profile, to choose the funds or to asset allocate, to what Eng Beow's point, right? I think to also further add on, I think Eng Beow's part that he shared about the company actually actively manages the fund range. I can attest that that's definitely true. Right? I think more than 10 years ago when I was handling the portfolio in itself, we actually have about every 3 to 6 months, we will be meeting up with the fund managers. we'll be looking at the fund performances of the funds that are on the ILP platform. And if there are funds that consistently underperform, we will take actions to actually switch that out. Right? So that customers do not get overly exposed to funds that are continually non-performing by a certain criteria. So that is also one part of an element of ILP that is actually actively being worked on at the back of it.
Okay.
Right. Another thing that I think that for ILPs in itself, I think that the past couple of years, I think ILP has been reasonably well taken up by the customers as a type of plan. From a new sales perspective, probably about 1/3 of sales is actually from ILP type of sales in itself. I think one of the often overlooked element, I think, of not just ILPs, but really life insurance plans in general, is really their role with legacy planning.
Okay.
Right? For life insurance policies, generally, I think if you structure it properly, I think what happens is that, let's say something happens to me that I'm unable to, perhaps I may have moved on, right? If I've nominated my beneficiaries and all, right, it provides a much faster payout than to go through the usual route, I think, of going through a probate, going through the courts to get the various documents, etc. So what that really essentially means is that the people that you care about, that you wish to protect if anything happens to you, are able to assess what you have put in place for them a lot faster.
Okay.
Right?
Okay.
So that's an element, and that's available in ILPs, that's available in life insurance product, which I think more often than not is probably less understood or overlooked.
In terms of, if we look at client types and objectives, Eng Beow, based on your experience, what kind of client goals do ILPs serve best? Can you give us some, just give us maybe an example, or just share with us, typical objectives that ILPs, the investment linked plans, work well when?
I must say maybe 0 to 20 years old.
Okay.
Maybe I break it down to the age, probably it'll be easier. Okay. So number one, again, is we always need to go through the fact finding and understanding the client's position before we recommend. So we don't like, so this group, I give you ILP. This group, I give you ILP. This group, definitely that's not the case. Okay, so I'm just going in. So in what kind of scenario where a 0 to 20, okay, may require certain ILP, okay, 20 to 40, okay, and 40 and onwards. All right. So I must say that, so at the end of the day, it's still how far are you away from your destination? Okay. If your destination is near, you may not need an ILP. Okay, maybe an endowment product guarantee may serve a better purpose for you. However, if the distance is far, you need to take certain risk. You need to understand how it happens. So personally, 0 to 20, I feel they are a very good group of clients to get an ILP. Personally, I have 2 ILP for my child. Okay, so because a key fact of ILP is that generally a lot of, I'm not saying all, but a lot of ILPs, after a lock-in period, the cost is minimal. So it's really like what Mr. Wai Kit said, it's long term. However, maybe during the first 5 years, 10 years, because market is not doing well, some of clients look at the ILP and say, why is it not performing? They forgot the coverage things, and of course there's the allocation charges for the older set of policies, and maybe there are some admin charges. But beyond the lock-in period, that's where the loyalty bonus may start to come in. That's where the charges may be minimized, and they can start to see the fruits of their labor.
Okay.
Okay, so I would say that for 0 is a good education planning and good legacy plan for them. So for my daughter, I'm not going to just keep the policy for 20 years. Okay, it's a plan. I will share with her. Okay, so is this policy, this year is this, remember last year how much was it? Okay, at 20 years old, it will be how much, so you can use it for education or so. Then next thing is that at 25, I mentioned to her, after 25, I've already gone through all the foundation building for you. After that, you are just getting all the loyalty, Continue to pay this premium. Just pay this premium. What you need to do, probably you just need to change your funds. Because funds 25 years later could be different. That's a part of the autonomy that the client gets. Yeah, and the clients must understand that at the end of the day, the performance of the plan is dependent on the funds. Okay, so for young, I would encourage, because I must say that, okay, until they retire at 65. The loyalty bonus that they get is amazing.
Oh,
Yeah.
okay.
So then next for 20 to 40s. So this group, I would say that if income is not as high now, okay. However, they really want and liabilities are not that high also. Okay. So I want to have something that has coverage. But I don't need very high coverage because anyway I'm single, okay, not much liabilities. I also want to start to plan for my retirement. And we know in retirement, compounding returns will work very well for you when you're young.
Yeah.
Okay, so ILPs will work well for them to have a hybrid of coverage, okay, and returns at the same time. Okay, so for someone who is 40s and 60s, probably they may look at legacy planning, or they may be looking at income for life, because as real estate market advanced recently, dividend paying funds are so common now. Okay, so just some of my clients are asking me, is 65 years old, my endowment matured, where do I put the money? I put into the bank. She told me I scared.
Scared? Why? Why scared?
Scam.
Scam. Oh, I see.
Yeah.
Okay.
So that's why the top word in 2026 is trust.
Okay.
Drug trafficking can lead to death sentence. And the real return may not be that high. So there'll be more and more scams coming out. I would say that maybe in future, scam is 1 in 3. I don't know. Yeah, all of us, one day we could be a subject of scams. So that's why, and also if I have a lump sum of maturity I put in the bank returns is not going to sustain my inflation. Okay, so for ILP, one beauty is that you can change it to a dividend paying fund, and you start to get the dividends as your monthly income. This is something that we always share with our clients. Can we live without insurance? Technically, Shalini, can you live without insurance?
I think so, but you got to be prepared to weather the storm yourself, lah.
I must say that, okay, I'm an insurance man, but I say that we cannot live without insurance. But can we live without income?
No.
Cannot. If I've responsibility, me and my family cannot live without income. So that's where the insurance component need to come in. Our tool is a solution to ensure that the income will come in. Either when you're working, okay, you're making an income, we want to protect your income. When you're no longer working, hopefully the policies can give you a passive income, okay, to take over whatever income you've been making, so that we know that there's dignity, there's certainty in terms of your retirement. And we know that now in retirement, there's 2 twin terrors. Number 1 is longevity. Second is inflation. Okay, so inflation gets higher. If I plan it for 20 years, I could erode it in 10 years. If I'm supposed to live 20 years, I'm living longer. Wow, that's a challenge also. And in addition, now clients want more. In the past, clients only look at enough for myself is okay already. Now, can I have legacy for my children? Can I leave more things for them? So that's where this combination may be good. So while you're around, you get the dividends, okay? And then when you're no longer around, whatever is the remaining can be a legacy given to your next generation. Yeah. And I must repeat, I must emphasize, when we go into any investment-linked policy, 2 key questions we have to answer. Number 1, what is the objective? Is it for retirement? Is it whatever it is? So because with the first question, then will lead to a second question. How long are we away from it? Because ILPs are meant for the longer term. It's not there for in 3 years I need it, in 2 years I need it, next year I need it. No, ILP is not for you. So even for a 50-year-old customer, can they buy an ILP? I would say yes. If they're only looking at accessing to this fund in 70 years old, which we do have clients doing that, because 50 years old, they said, okay, maybe in the first 10 years of my retirement, I have some savings. And then 65 years old, CPF life cards coming in. Okay, then I want to have some funds that come in only at age 70. That can be done. This can be a it can be a good source of additional income for you. So at the end of the day, it's really how long are you in the market? That's the most important determinant.
Very good. I'm going to skip the question on flexibility and come back to it first, but I want to quickly cover a little bit of myths on the investment-linked plans, right? So the biggest myths that we hear about investment-linked plans, myth number 1, ILPs are just expensive ways to buy unit trusts or funds. If you're savvy, you'll never touch them. Why, Kit? very quickly. I see that we got about 13 minutes on the clock. We're going to try and zoom this really quickly.
I think we are talking about very different things here. I think what ILP offers, while it offers access to also investment returns, I think is more than that. Right? It offers flexibility, like what I mentioned earlier. It offers protection. It offers investment returns in itself. And importantly as well, it is never meant to be exclusive. It doesn't mean that you buy into an ILP, you cannot do your own investments on the side. Right? So to me, as the cost in itself is a reflection of the package of benefits that you actually enjoy from having the plan. So it shouldn't be just looked at very simplistically, oh, this is the cost for an ILP and this is the cost for, let's say, unit trust per se. Because I think the functionalities, the usage of it, the time horizon, etc., are just different in itself. Yeah.
Okay. All right. Very good. Eng Beow?
So just a personal sharing. So I had 2 ILPs myself. I had 2 for my wife, 2 for my daughter. Okay. One key feature of ILP is always in the premium waiver.
Okay.
I strongly believe that at the end of the day, maybe probably I want to ask you all a question again. The question man. Okay. Which is more painful? Okay. Losing 50% of what you have or not growing what you have by another 50%? Is it A, losing 50% or not growing it by 50%?
Losing 50%, I think. Yeah.
Yeah. So all of us have this. I would say that that's what our policies aim to do. It's really to protect the baseline.
Okay.
Yeah, because if today I can start an investment, but tomorrow, as I mentioned, my income is gone, I cannot continue to service my investment. I don't talk about future returns anymore. But with an ILP, because of the premium waiver, the policies can still be funded so that in 10 years, 20 years, there's still a sum of money for the retirement. That's the baseline that I always mention.
Okay.
Because 1 in 3, 4, 6, a big number will recover. So that means this big number of people, they will need to have retirement. So if they don't prepare enough for them, where are they going to get money from?
Okay.
It will be the government's resources. It will be the family's resources. Yeah, so that's why I always say that policies are there to keep families together. Okay. So to back to this part again. So maybe we do it here first.
Okay.
It's to keep families together.
Okay, very good. So myth number 2. 2 is better than 1. Okay. By term, invest the rest separately is always more beneficial. Myth number 2. Wai Kit, what do you think?
Okay, again, I think that it depends really on the customer profile and how he or she decides to manage in itself, right? Now, I think the fact that some customers may prefer to really actively manage their investments, their monies, right? Whereas others prefer a more guided, a more structured approach towards it, right? A lot of times when the concept of so-called buy term invest the rest, one very key element of that is your regularity of quote-unquote invest the rest.
Okay.
Right? More often than not, sometimes with some savings over time, there is a group of people who will tend to, instead of continue to invest or reinvest, you might use it for some other purposes. Right? That can derail a person significantly from their financial planning. Right? So while in an ILP, you are a lot more guided through, in that sense, from how you plan towards your journey, for your financial journey towards that medium to long term goal. Right? So I think that it is, therefore, I think really a lot back down to what are your needs, what's your habit, what's your discipline to be doing what you need to do.
Okay.
Right? So even things like regular reviews. And that's a very key element of it. Right? Unfortunately, more often than not, we know that we sometimes don't have that discipline.
I'm
right?
guilty of that.
And from that perspective, if you go on buy term invest the rest, I'll at least be aware of what the risks are.
Okay.
Right.
Okay. Yeah. All right. Eng Beow?
Yeah. So I remember this thing. Okay. Maybe I'll ask all of us. Okay. What is the most important thing in life?
Oh my God, it's such a wide question.
So
I could go anywhere.
Right? Okay, so recently I chanced upon this. I think Mr. Eng Beow also said this, health.
Health, okay.
You have 1,000 of problems, but when your health has a problem, you're left with one problem.
Okay.
Correct. Health is really important for all of us. So that being said, how frequent do we go for follow-ups? Recommended 40 years old, every 2 years go for a check. How many of us do that?
Okay.
I'm guilty.
No, I'm guilty again. I'm guilty of so many things right now.
Yeah.
It's not making me feel good at all.
So that's why there's this saying, the biggest distance in life is knowing and doing. We know what we need to do to be healthy, but to really do that, when it's time for a jog, it looks like it's going to rain. Okay, so we'll put off certain important decisions. So that's why really we haven't been emphasizing the importance of an advisor or consultant, that's helping you with the journey, the co-pilot with you. Because for consultants, okay, we always ask for regular review. So really number one thing is really to validate what you have. And second is to see if is there any shortfall, is there any new things that arise. Because there are two key things about buying term, or two is better than one. Okay, number one thing is there a chance for system error? There is always chance that the gyro may fail. Okay, if I buy a term, what happens if I don't pay the premium? Due to gyro problem or due to I change of a bank, I change of a bank, I forgot to put money into the bank and the gyro drop. Wow, that's a big problem. And when my health change, okay, and for a term is that when it's lapsed, I cannot you must proof of health before you can reinstate it. Okay, so that's where an ILP plan can come in, because the cash value will be there, the policy can go into premium holiday, okay, and the coverage will still be there. So buy term, invest the rest. And I must emphasize this. I agree with Wai Kit. We are not here to say that everyone should put all your money into ILP. No. It's always a diversification. So where will ILP go in? My stand is always this thing, to protect the baseline. ILP is there to protect the baseline. What is a baseline you cannot afford to fall below? Okay, then use that to protect your baseline.
Okay.
Yeah, because you'll be there to ensure that there's likelihood reduced in the chances of things going wrong. Okay. And the second thing is what Mr. Wai Kit mentioned, I'm going to buy term and invest the rest. Okay, so we have this very interesting formula. Okay, income minus savings equals to expenses. First equation. Second equation, I don't know if you can write it out. Okay, income minus expenses equals to savings. Means the first one, I save first and I spend the rest. The second one, I spend first, then I save the rest. Who will be wealthier in future? The one who save first or the one who spend first? Save first, right? Yeah, it's very difficult now to spend first and you save the rest.
True.
Because ended up, okay, we will forget, okay, I forgot to invest. So having this disciplined approach will definitely be better. Okay, so number one is that having a ILP, you will be ensure that if your coverage will be there, even if gyro were to fail or anything were to go wrong, or maybe you were out of the country for a while and you forgot about the payment. Okay, and next thing is really about the discipline, and the last thing is really on the waiver.
Okay.
When things goes wrong, the premium will still be paid.
Okay. All right. Myth number 3, last one. ILPs are mainly sold because of commissions. Otherwise, nobody would recommend them. I know this is a pet peeve, I think, for everyone here. Tell me, what's your thoughts, Wai Kit, Eng Beow?
Now, I think that being paid, right, for a certain service is nothing unfamiliar. Go to a doctor, you pay for doctor's fees.
Correct.
Go to a lawyer, you pay for lawyer's fees. Take a public transport, you got to pay for a public fee. Right? So the fact that yes, does commission exist? Of course it does. And why? It is because you get, for an insurance product in general, not just ILP per se, right? For insurance product that you get into, you get the advice, you get the service, you get the back-end support from the insurance company, etc., to send you statements, to send you all that, right? So there is a part, of course, about incentivizing a sale. Now, end of the day, I think today as where we are, probably 8 out of 10, 9 out of 10, do not wake up and think about buying an insurance plan.
No.
Right? We still need somebody who actively remind us that we have not planned well for our future. There are better ways to be protected, right? And that is where I think a very key role to understand our own needs, our own profile, and that's where that professional comes in, right? So is commission being paid? Yes, it is. But why not? Because they are providing a value add to the life of the customer. So to me, I think that is something that is important to actually recognize.
Okay.
Yeah.
Eng Beow?
Yeah, I thought the angle we should be focusing on is how is this solution serving me? So example, if I need to go and get a coffee, I don't go and say, how much is your charges? No, I'm going to get a coffee because I want to see the benefits of the coffee. It perks me up and so forth. The next thing is maybe I just compare the cost, which coffee is within my budget. Yeah, that's the thing. I thought commission, I agree totally. Anything we do, we need to be compensated. Okay, so it's just that whether or not this is a fair form of compensation and whether or not this solution works well for me.
Yep.
Yeah. So ILP, I want to mention is that if we feel that it's the commission that drives, okay, there are other solutions that pays higher commission than ILP. Okay, so but we're not in this conversation. No, at the end of the day is what is best for the consumers, what is
Okay.
best for the customer. Do you feel that this is a suitable solution for you? That's why I mentioned. At the end of the day is you want a protection plan. Okay, so we'll show you the various options for your protection needs. Then the next question is that some clients say, can I have some returns? Okay, so probably we want to show you some of the comparisons. This is for retirement, so these are some of the solutions we have in for you. But based on whatever your demographics you are facing, what the different life stages you are having, okay, so probably what's the most suitable way to handle it.
Okay.
So the focus is that I would say there's no free lunch. Anything we do, there will be compensation.
True.
But I must mention, ILP compensation is not perpetual.
Yep.
It is not perpetual. And it is really like a risk that the consultants need to bear. Okay, because client acquisition, it doesn't mean that I meet 10 people, okay, all 10 people will do up a solution with me. I want to mention this thing. We always believe there's a client for every consultant and there's a consultant for every client. So for the clients out there, okay, it is your right to say no. It is your right to say no if you feel that this is not comfortable. Okay, and please ask the question. Find a consultant that you feel, okay, you are comfortable to ask question. Okay, and what he says, okay, you feel that is reasonable. So so at the end of the day, I always have this question. Okay, so EB, so many type of policies. There's term, endowment, ILP. Which is the best policy? Shalini, what is the best policy?
I don't think there's
Like,
one
give us the
answer,
best
right?
policy.
There's no one answer for this. Yes.
I have an answer for it.
Yeah. What is the answer? Okay.
Honesty is the best policy. It's only when the client is honest with us, okay, on the needs, priority, and what the things they're facing, and their habits, spending habits, and so forth. And the consultant, we are honest to find you what's the most suitable. Then together we can come together and get the best policy.
Give us a real case example, in terms of how ILP has helped the client achieve a medium to long-term goals and felt that it aligned with their expectations, very briefly, if you can.
One, I must say that we don't buy insurance to claim. Okay, insurance is a best case scenario after a worst case situation. I must really repeat this thing. Don't have this notion that I buy a policy, I didn't claim, I'm making a loss. No. Being healthy is always the best case scenario. Okay, but for the point about ILP is always about how do I safeguard my retirement. I have this client, she bought a plan for me when she's 24 years old. At the age of 30, she got diagnosed with thyroid cancer. Okay, so very young age. Okay, so the ILP plan paid out 50,000 and the premiums are waived. And now she's married. She has a young child, 2 years old.
Very good.
So this is what a comprehensive ILP can help our client. So the ILP now she don't need to pay anymore, and the cost of insurance is minimal because the 50,000 for critical illness cost of insurance is no longer there because once it's paid out, she no need to pay the cost of insurance.
Okay.
So it actually
it's-
can work
okay.
well for her retirement.
Okay.
Yeah, but I must say that we really hope that nothing happens to our client.
That's true.
Yeah, she can continue to work, recover fast. That's the most important thing for all the policies.
Okay. Last question, okay? Wai Kit, to you. What's the one thing you want our audience in Singapore to remember about investment link plan after this episode? One thing. If they didn't hear anything else, they didn't hear Eng Beow's story about gardening, rain, turbulence, all that. What's the one thing?
All right. I think that the one thing is really to be honest and to ask question. To be honest about your needs, your goals, and to ask. What you are not sure, not clear, ask. Right? I think a lot of times people sometimes shy away from that.
That's true.
Right? They might not be sure about the benefits, they might not be sure about the cost, they just, never mind.
Or their
Right?
friend
It's
told
all
them,
right.
buy this product, right?
Or
Yes.
don't buy this product.
Or don't
right?
buy this product,
Right.
yes.
So the question being be inquisitive, but also be honest about your own needs and what you're trying to aim for and gun for.
Okay.
I think that's important.
Okay. Eng Beow, your one piece of advice to give to someone who's curious, yet a little bit cautious about investment linked plans and wants to make a well-informed decision. What would that be?
Yes. So this I really must say that no one platform will tell you that 100% of their customer make money. Yeah. So it can be different marketing effort. So don't listen only, but we also must go in there and make research because it's your own retirement, it's your own family planning. So if something happens to a family, the other person, your friend, cannot help you. So you have to be the one to make the decision. So my key take is set up a regular, have this habit of setting up regular review with your consultants. They'll be more than willing, more than happy to set up the regular review. Not once a month, once a year, or twice a year. Now with Zoom, now with all the, we can meet in person, we can meet non-face-to-face.
No excuse not to do it.
Yeah,
Okay.
it's really, commit to this 30 minutes or 1 hour of regular review.
Okay.
This will really help you in a portfolio.
Okay, Wai Kit, Eng Beow, thank you so much for this open, I think, and frank, and really a lot of, I think we uncovered a lot of information or clarified, I would say, a lot of things that even not say even I there's a lot I don't know about ILP, and I'm really glad that we managed to clear up a lot of doubts. And to everyone listening, I hope, I know that ILP is talked about a lot, especially in Singapore. Sometimes, we hear the good, we hear the bad, but really it's about, our aim today was really about stating the facts, right? Why it exists, what it does, what's the purpose, what's the objective, who is it right for. And also, I think as much as in the industry, as advisors, we have responsibilities. I think as people who buy the product, we also have our own duty and responsibilities to understand what we're buying, to have that conversation that Eng Beow talks about, doing that review, having that discipline as well. I think that's something that a lot of us lack, the discipline to invest or to look at our policy, do a review of our portfolio of all the different products that we have. So I'm really glad that we had this conversation today. Now, ILP is one tool in the toolbox. It's useful for some people, less suitable for others. The most important thing is that you understand what you're buying, you're clear on the time horizon and risk comfort, and you ask the right questions before you commit. So thank you. Thank you again, Wai Kit, Eng Beow. Thank you for listening, everybody. I hope this episode was useful. So if it is, follow and subscribe The Risk Factor. Do share this episode with someone who's heard that ILPs are not for them or bad. Stay tuned for our upcoming episodes, and we'll keep unpacking products, risks, trends, and opportunities shaping the insurance in Singapore and Asia. I'm Shalini from Singapore College of Insurance. This has been The Risk Factor. Thank you for listening, everybody. Thank you. Thank you.